a licensed financial services provider. I do like your letters, by the way. Bruce W. at 702.co.za. Serious questions from you, anything to do with personal finance, particularly for Warren Ingram. And the trickier it is, the more we like it, because it ties Warren up in knots and gets him busy because he doesn't have enough to do in the week. This week's letter, Warren Ingram, comes from Billy, and it says,
Did you say letter?
Letter. Yeah, it's an old-fashioned way of saying email. This week's correspondence, okay, we'll put it that way. Don't unseat me. My 10-year-old son has recently had a cash windfall and has 5,000 rand to invest. We'd like something comprehensible, but simple enough to monitor on a regular basis. He may earn future money as part of an early modeling and acting career, so it would be good to be able to add to this from time to time. We don't have time, and I mean, who does, to do in-depth research on individual companies. We want to educate him on markets and investing, but we don't want him to be overwhelmed with too much information. Would it be, and then a separate thought, it's not very cohesive, this email. Would it be worth converting into foreign currency, or should we keep it in rand? And then this is to you, I think. I understand you're a fan of index investments. I was wondering if you'd be able to convince those creative people you've mentioned before, Easy Equities, to create a kid ETF or a kid teen-friendly ETF. They could put together a basket of global shares like Nike and Yum Brands and Facebook and Amazon, companies that kids can relate to and that don't require you to buy individual stocks or portions of stocks. Failing that, do you just put your money into the S&P 500 like Warren Buffett?
You make it sound like a bad thing, the last option, like it's a failure.
Look, the S&P 500...
Failure to launch.
No, it's having a 9.5-year bull market, and I just feel like it's going to come to a sorry end at some point, because it's the longest running bull market in history, and so that's fine, and Warren Buffett says it's good. But it's kind of boring. And we're looking for a little bit of zip and zap and to make a kid interested in this thing called investing. Get them young, Warren Ingram. Get them young.
Okay. So thank you for the in-depth homework. It took me 4.5 days, but I'm ready for you.
Excellent. Your shareholders will be delighted.
So I think the thing about investing when you're young is, I think you have to find a way to emotionally invest in this as well. In other words, I'm not saying you must get married to your investments and never sell them or become an emotional wreck. That's far from the deal. But what I am saying is, that you are prepared to do a little bit of work, and I'm saying a little bit. I'm conscious of what of the brief we've been given here, but a little bit of work in terms of understanding what's out there, what's working and what's not. And I think if you are if you're a consumer, which is let's face it, I mean the group that spend the most in terms of disposable income are kids with parents because they don't have to pay rent and all those things. Whatever they get, they can spend. And so for them, they understand certain parts of the consumer market very well, possibly a lot better than people on the other side of 50. And so my view is that it makes a lot of sense for them to do a bit of work on, for example, who's making the best games? What company provides the best games? What's the best handset maker for these games? And who's got the best clothing brands that are kind of on trend and applicable to them and so on and so on and so on. And I think the only unfortunate part about a conversation like that is I don't think there are South African listed companies that would register on the radar of millennials and people younger than that. And so, part of the question was, does it make sense to send the money overseas? And I think that the answer then is yes, because if you're going to identify with those kinds of companies that you are a consumer of, fortunately or unfortunately, those are largely American companies.
But we're talking about the princely sum of 5,000 rand here.
That's okay. So we, Easy Equities was mentioned, and a company like that, what they've got right is to get rid of minimum rand fees for buying or selling investments. In other words, if you've got 5,000 rand, they're not going to, like a stockbroker, a South African stockbroker, say to you, okay, you can buy or sell whatever you like, but it's going to cost you a minimum of 150 rand, or then 0.5%, above that. What they would do is say, it's going to cost you 0.5% as an example, or 0.7, or whatever the deal will be. But whether it's 0.7 of 10 rand or 100 rand doesn't matter to them. Their fees are fixed as a percentage. So they are easily available to people that are going to invest an amount like 5,000 or 10,000 rand.
But you're not, this is important clarity. You're not physically taking the 5,000 rand and going to your bank and saying, hello, could I have dollars, pounds or euros, please? You're going to a platform, be it an Easy Equities or another one, and you're saying to them, here's 5,000 rand, could I buy some international companies, please?
And so what they will do, and you could do it yourself or you could do it on their platform, is you are actually going to convert your rands to dollars. So that's an important point here.
And are those dollars that are domiciled in South Africa, or are they dollars that are now offshore?
No, then they'll be sitting. Then they'll be sitting on the Easy Equities global platform. So they'll be sitting on a dollar platform, buying fractions of dollar shares.
Okay. And so that money then at some point, because I mean, a lot of people are worried about education. A lot of people are worried about the long-term future of the country, blah, blah, blah. And if their kids want to study overseas, for example, their kids could access this money internationally at some point in the future, should they choose to do so.
Yeah, there'll be a little bit of paperwork. They're obviously going to have to just get FICA'd for whatever that overseas bank account would be. So in other words, show proof of bank and ID and et cetera, to Easy Equities. But absolutely, that is the premise of this whole thing, is to build up an international asset base, and it can be then, transferred anywhere. And I think just, importantly for people that think this is a way of dodging SARS or anybody like that, it's not. All of the stuff is disclosed to SARS here. So this isn't a tax dodge in any way, shape or form. It's just another way of investing in a range of companies that aren't available in South Africa.
Okay.
So
carry on.
But part of them, I'm so well briefed for you, Bruce. But part of the deal here was, okay, we don't want to do a lot of homework, and what can we do around that? So I think one of the things that you'll need to do if you go to that Easy Equities platform is have a look at and it's funny names. There's one type of investment called baskets, and there's another one called bundles. And what these do is that they collate portfolios of shares. So someone who doesn't really want to do too much homework can look at those baskets and bundles and say, okay, I can see what shares they've got in there, and there's going to be one that's, for example, just around gaming. So companies that are at the leading edge of the gaming industry. So whether they're making games or making the consoles for games, etc., and someone might have an affinity for that. So you could say, right, out of my 5,000 rand, it's going to be converted to dollars, but I just want to keep it to make the math simple for now. 2,000 of my rands are going to be put into a gaming basket because that's what I believe in. Or there's another one which will be, the top stock picks of the time, and there are a lot of companies in there that I really like, so guess what, I'm going to do that. Or there's one, that seems to try and track the methodology that someone like Warren Buffett would have used and follow that. Probably not so applicable to millennials and younger people, but the point is that there are quite a few options there. I couldn't find one that kind of met your requirements specifically, that would be a multi-brand or multi-sector approach.
But haven't these guys at Easy Equities sort of had, I don't know if it was Bobby Skinstad, but the Bobby Skinstad portfolio, and they've created portfolios for people and marketed those portfolios. We should approach them and say, why don't you create a kid-friendly ETF, brands that kids relate to, games, all the stuff that we've been talking about?
Yeah, so I think there's huge merit in that, and it's kind of a nice idea that you sparked. And at the same time, someone approached me this week to say, how do we take the education around investing to people of a school going age? And so your question and that person's question tie up perfectly. And so I think I'm going to give Easy Equities a call. I probably won't give them a call because they won't answer. I'll drop them a message somehow, and they'll probably answer that way. And see if they can't do something around that. So I think it's a great idea. I think we have to go there.
I think so, because it just makes, from a point of view of simplicity, accessibility, in a 21st century world where everything is tech enabled, it's got to be possible and it's got to make sense. And if you can create greater interest in the investing public and get kids to be more interested in putting money away from a younger age, it's got to be advantageous, and you build some brand loyalty. I think this person, Billy, is onto something on this particular point.
So I can't leave without giving Billy some kind of insurance against fads and trends, etc. So one of the things that concerns me a little bit is that a lot of the brands that younger people would associate with now are going to be tech related brands. And unfortunately, that's the sector of the market, of any market anywhere in the world, that is probably the most expensive, possibly the most overvalued, therefore most prone to taking a knock. And so what I would do in a situation like this is I would say, put a portfolio together that's associated with the brands that you like. That's no problem at all. Take half to 2/3 of that. So, if it's $5,000, then put 3,000 into that part, but then take 2,000 and just put it into the generic world index. So they've got I had a look there, and there's one called the iShares MSCI International Index, which just means you're invested in the biggest companies across the globe, not just in America, right? From America to Japan.
That includes companies like Coca-Cola, and it'll include Toyota, and it'll include probably the big South Korean companies, for example.
Yeah, and then a lot of the companies that are making pharmaceuticals that cater to a totally different kind of a driver, to where people are aging and selling them drugs that they need to keep themselves healthy and alive, etc. So just a massive range of companies that that won't be tech related, for example, and the logic around that is just now that tech sector does take a huge hiding, and it's certainly done it before. I think the year 2000 is a great case in point, and if that happens, it doesn't mean that the tech sector is dead, and it doesn't mean that you might not still make good investment returns, but you do want some kind of drivers that aren't the same. In other words, a portfolio that's not just linked to one type of technology or one type of sector of the market. You would like a nice spread just to kind of move at different times.
Fair enough, but at the same time, if you invested in the S&P 500,
I hate the sighing.
No, but I've just been memorizing while you've been talking. I've been multitasking, which is a high risk activity. But I look at the top 5 holdings of the S&P 500, the index, the most beloved index in the United States. The biggest company in the world is Apple, worth more than $1 trillion. The second biggest is Amazon. The third biggest is Google. The fourth biggest is Microsoft. These are 4 21st century companies. I mean, Microsoft, we're cheating a little bit, but these are 21st century companies. These are tech-enabled companies. These are companies of the now and possibly the future. The fifth one is Berkshire Hathaway, which is Warren Buffett's company, and it's taken investments in Microsoft, in Google, in Amazon, and Apple. The top 5 companies on the S&P 500 are tech dominated.
Yes, so that's why I would prefer that investment that you do away from the tech sector then is in the world index rather than just the S&P 500. Because then your follow-up question is probably going to be yes, but Apple will still be the biggest company in the world. I agree, but it will make up a much smaller part of the world index. And so that's where you start to limit your potential exposure to that, and you will get bigger exposure to the other sectors of the global economy.
It would just be much easier if you could send an email to the people at Easy Equities and say, we've come up with this great idea, invent it, buffer
Package
it, make it safe, give us some downside protection, give us some growth opportunity, create a portfolio for kids that will entice them to put away their pocket money. And then you'll be doing a good thing for humanity.
Watch the space. Let's see what we can do.
You've got 7 days, starting 15 minutes ago. Warren Ingram, chat again next week. Warren Ingram from Galileo Capital. Good work.